Hey guys, Christian Nuderman here. In this video, I will show you how I have been investing as a software developer and how you really can put your money to work with this strategy. Very simple. So in this video, we will cover the basics you need to understand about investing. There's some basic concepts we will go through that will make this very clear for you why you should do this. An investment strategy that has made me a millionaire, pretty much an autopilot that you can just plug into now after watching this video, and you can do the same thing. And what assets to invest in and all that stuff. So let's get started. The investments basics you will need to understand is like, if you keep the money in your bank, you don't put them to work. And ultimately that's what you want. That's kind of a waste if you don't have them working for you in one way or another. And we want to own assets that gives us cash flow and appreciates in value, because otherwise we're just wasting our money for nothing. This will compound over time as you buy a bigger and bigger investment portfolio, also known as the Snowball Effect. And basically you will just run this on autopilot, not really think much about it necessarily, and you will look back in 10 years and you will see like how everything has accumulated, how like interest has been like accumulated with interest over the years, and you'll be surprised how much your portfolio is worth a few years down the line. The three biggest areas to invest in is stocks, crypto, and real estate, using the barbell strategy and dollar cost averaging. So the barbell strategy basically means following the 80-20% rule. We want 80% of our assets to be in safe assets, which safe based on the historical returns and risks. And then we want 20% to be more like calculated bets that have limited downside but huge upside. So we see that as worth it. Also, like the idea behind this, it's you can afford to lose 20%, and then as long as you have like 80% of your if your net worth in like safe assets, then you can afford to lose 20%. So yeah, basically it's 80% in stocks, and for me it's S&P 500, Vanguard S&P 500 ETF. That's one Warren Buffett he recommends. It's been performing very well. Then 10% in crypto. Basically, I've been mostly investing in the top 10 coins. So that is right now I'm only buying Bitcoin, Ethereum, Solana, and AVAX. And and then because that's an area where there's a big upside potential in crypto. You see like 5, 10, 15x just on the top 10 coins in a bull market. So don't necessarily look at the smaller ones because they have to be traded more actively. The bigger ones, you can be a little like slower on the trades. You don't have to like watch the trades all the time. And then 10% real estate. Real estate has always been like a market that has like a productive demand in society. People need a place to stay. If you buy in a big city with like growth and opportunities, then that city is not going anywhere, and that place would always have value. So let's say you have $1 million, and so that would be like 800k in stocks, 100k in crypto, and then 100k in real estate down payment. And I say down payment because ideally you would get a mortgage for as much as possible to leverage your money. Then there's dollar cost averaging, which means that we buy at a certain interval regardless of the price. We basically put our investment strategy on autopilot. We don't try to time the market. We just buy regardless of if it rains or shines. We believe in compounding and the snowball effect. And basically I only keep cash for like 6 months of like living at a time, and the rest gets invested in with this like barbell approach strategy. And every time money comes into my bank account, I keep what I need for the month, and I invest the rest of the money on a monthly basis based on these like barbell strategy proportions. So stocks. Warren Buffett said that people dollar cost averaging in the S&P 500 stock market, which has around a 10% average historical return since 1950. would beat most actively traded mutual funds without any work. It's just you buy at a certain interval and you beat like the fancy mutual funds that has to wear a suit in New York every day. So yeah, that's why this works. For the most part, single stock picks are not worth it, in my opinion, because I see people that spend all the time trying to like actively trade stocks, and we try to pick the right stock and all this stuff. But the thing they forget is like they don't get the snowball effect and the accumulation, which is worth more than like actively trading. One thing is like when you actively trade stocks, you pay more taxes because you have to pay tax on like every trade basically. But if you just buy and hold, then you don't pay taxes, so you can accumulate tax-free basically with this strategy. And also it frees up your time. You don't need to spend time on this. You just buy every month and you focus on your craft, and then probably you'll make more money in your craft, which is, especially when you're starting out, it's more important to focus on making more money. Maybe go from like a software developer job to being a freelancer. That is something that can 2 or 4x your income. That's going to be, that's going to matter a lot more than trying to pick the right stocks and make a little bit. If you don't have a lot of money to invest, that's going to pretty much be a waste of your time. So basically, I mostly just buy the Vanguard S&P 500. I buy it in euros because I'm European. So yeah, that's what I want to say about stocks. And yeah, there's some people that think they can beat the market and pick the right stocks, but I think for the most part it's kind of a waste of time. And if you're not into like doing like trade, like stock analysis and stuff, just buy the S&P 500. Like 10% average historical return is great. So yeah, that's why I put 80% of the portfolio. Then we have real estate. For the sake of your career as well, I recommend living in the first place in a growing city with opportunities. If you're not living in a growing city with opportunities, you are already like limiting your opportunities for your career. So yeah, that's first of all would be something I would focus on, like live in a city with like growing with opportunities. And if you do that, then I would buy a property there. For example, I'm from Aarhus, which is the second biggest city in Denmark. It's like a student town, but it's pretty good in tech. So I was able to get a good tech job right after university there. It has a population around 300,000 people, but it's a growing city, and many people come from the university, and also it's getting more international now. People are coming from elsewhere to study there, especially. It's a big university. So I bought a property like right next to the university, and I left Denmark like 3 years ago, and I've been able to easily renting it out. It makes a great return. I make around, on the profit side, like 15% return on the rental, and it's been appreciating quite a lot since I bought it in 2018. So that's been a great investment. But yeah, real estate is pretty much only risky when you buy in like small cities that are not growing. If the city is growing, the real estate is going to be worth more. That's just how it is. New York, Miami, Copenhagen, Berlin, you name it, the big city, or even like Aarhus, or like the second biggest city in a country, they're not going anywhere. It's very unlikely that they're gonna collapse, or they're gonna be like the city as a whole is going to be less attractive to live in. So I recommend you live in a place that has like, you find a place, you live in a place that has opportunities as of like city of a substantial size, that where you can get a good job there, meet good people and have a good life. And then you buy your first property there and you live in it yourself, because you are the best tenant rather than finding another tenant. Also, if you have a tenant, you probably pay taxes on what's the rental income. But if you get more properties or you move to another place, then you just rent out this property, because you make sure to buy in an attractive city so you can easily rent it out. So what I did is I did a 20% down payment and an 8% mortgage, which I recommend you do as well. I bought it like when mortgage was was a lot cheaper than it is now, but I still think even today I would do the same thing, because I still think it's cheap enough to make sense to buy with a mortgage compared to like what you make. For example, if you have a tenant, I can on mine I could make 15% cash and cash return from my in my apartment. So that's of course that's more than like if you pay like 4 or 5% on the loan. So that's that's still you're still in profit. So I would definitely leverage it and take the mortgage 80%, but to do the 20% down payment, because if you do like the bank loan from this is going to be a lot higher interest, and that might not be worth it. So that's my philosophy, like loans on real estate. And then we have crypto. I used to be scared of holding crypto. I started getting into the game quite late, unfortunately. I started investing at the same time Elon started buying Bitcoin for Tesla. That was like in the February 2021. And yeah, it's such a big upside potential, and in my opinion, it's worth the bet from like where the world is going, and just like people need a place to store money, and alternative to like gold, where they can store money, and also like there's some utility in games for like some of these like coins are used like an infrastructure in games, and it's coin that's traded in like a virtual world in games. So that's that kind of put them on some like productive use. So my take on crypto has mainly been just buying the top 10 coins. I've been dabbling around the top 10 coins, but now I mostly entirely buy Bitcoin, Ethereum, Solana, and AVAX. Solana and AVAX, they have they're the smaller ones, but they are used in games, and many like new games are betting on them. They have some like promising performances in terms of like the transaction, like the rate of transactions and the fees, which like where Bitcoin and Ethereum, they're like the dinosaurs in crypto that has some legacy problems because it was one of the first coins, and it's kind of hard, as in tech, it's kind of hard to change something that is fundamentally not built to scale. And these newer projects, they are more like built with the right infrastructure that, they get it more like right the first time. So right now I'm more into like Solana and AVAX now than I'm in Bitcoin and Ethereum. But it depends like on the time of the like bull run and the crypto cycle when you buy it. If you're on the way up, you want to look at the smaller coins. If you're already in the bull run, you want to look at the smaller coins like Solana and AVAX, because maybe the Bitcoin and Ethereum don't have much room to grow. But if you're buying like when it all crashed down and it's super cheap, then it's worth buying all of them, I think. I buy mainly on Binance. It's a cheap place to buy the crypto, and you should get a ledger plus maybe backup and move the tokens to the ledger, so you don't keep it in the exchange, because that's how you lose all your money. If you keep them in exchange and it goes bankrupt, it gets hacked, whatever. So you want to keep your money. Many coins can be staked with like coins like Ethereum and Solana and AVAX. They can be staked because they use this proof of stake algorithm, where you can basically stake, and part of the consensus algorithm for the coin, how they validate transactions, and that can give you like a 15% yearly yield just by doing nothing, which is it's pretty cool. That's like your real estate, where not only is it appreciating in value, but also you get a yield. And there's a Bitcoin ETF now, so I guess you can even buy without having to hold yourself. I'm not into that, but I don't mind, because I like to hold it, and I can stake it, and I can hold it myself. I don't mind that. And crypto can fluctuate more than stocks, so I try to buy more in down markets. Yeah. So for crypto, you don't necessarily want to like just autopilot it completely. I think for stocks, it makes sense to dollar cost average it, but for crypto, I dollar cost average in periods where it was very cheap, because it fluctuates a lot in when it's a bull run, or it's or it's crashed all the way down. There's a big difference. Like Bitcoin can go from like 40, and then it was all the way down to like 15k or even lower. So yeah, of course you would want to buy more when it's very cheap. So yeah, you would be more like in periods of time, you dollar cost average in crypto when it's a good opportunity to it. But so if you buy in a bull run, you want to and Bitcoin and Ethereum already is a high price, then it's not really worth it to get into that. So you look at like smaller coins like Solana and AVAX. So you at least can get like a 3 or 4x. But yeah, that's the thing. Like we make a bet here that makes us like 5 to 10 throughout a bull run. And then we want to try to sell, before the bull run is over, because otherwise it goes back again. So it follows like the economic cycles, and Bitcoin follows the S&P 500. And then it rains down on Ethereum, then it rains down on Solana and AVAX, and then it rains down on like the top 50 coin, the top 100 coin, and the microcap. But yeah, I don't really trade much microcap because, as I said, it requires more like active trading, and I want to have like a simple approach, but can make me focus on my craft instead of trying to trade internet coins. So summing it all up, you buy S&P 500 every month, regardless of price. You dollar cost average in crypto in down markets, but right now it seems like it's going to be like a bull run back in 2024. So currently I'm looking more into like the AVAX, Solana. I'm not buying Bitcoin and Ethereum anymore. I did in the down market, but now I'm focused on the coins with bigger upsides potential. You buy a property in a growing city and stay in it yourself or rent it out if you move to another place. So this strategy hardly takes any of your time, and you can focus on your craft while putting your money to work. So yeah, if you want to get involved more, you can join the free Angular Architect community, which is a Discord server where you can talk to me, and I can help you with Angular and career related stuff. You can join the free workshop for Angular Architect Accelerator. You can get a taste of that and see if that is something for you. If you want to like get my blueprint, how I do Angular high-end freelancing for big clients, and you can learn the industry best practices. I already wrote hundreds of Angular blog posts revealing how it's done in the industry on my blog. So you should go to my blog, check that out if you want to learn more like Angular specific stuff from the industry, and subscribe and stay tuned for more Angular and career advice videos. See you next time.